Anand, thanks very much for joining us on Young Turks. It's a pleasure to have you on this show.
My pleasure. Thanks for having me.
Well, let me start by asking you about what you make of the India startup story today. You've been in India quite frequently over the last couple of months. Everyone's talking about the frothy valuations, but do you believe that we are going to see a significant shakeout at this point in time?
Well, we already, I believe, are in the beginning of that shakeout that's going on. The last couple of years have been this period of easy money, where lots of money has flowed indiscriminately into a lot of companies, pumping up valuations, as you suggest.
Yeah.
And some of them may have gotten out of hand. I believe this year the easy money has dried up. And a lot of startups are sort of focusing on getting back to basics. We hear talk about unit economics and profitability and repeat usage, customers and stuff like this. So we're sort of getting away from companies just buying customers and focusing on the top line and moving to the fundamentals of building a sound business. So there is definitely going to be a shakeout. Not all the companies that are that were funded and that were hyped during the cycle are going to survive this downturn. We saw a similar thing in the US.
Here in the Valley,
In the Valley, that's right. So, not many entrepreneurs or in the Valley, in India, definitely not even in the Valley, lived through that cycle from, the last internet boom in Silicon Valley from 98 to 99, 2000, and then the shakeout that followed. In many ways, there is a resemblance, to what happened here then and what's going on in India now. A lot of companies were funded. The one difference was that here there were a lot of IPOs as well, which didn't happen in India. But other than that, there's a lot of resemblance to what's going on in India. Not too many people remember in 2000 Amazon almost died. So they went through some tricky situations as well. But they came out a much stronger company at the end of it. In fact, the downturn, just to use Amazon as an example, forced them to innovate and change their business model, and they went from a company that primarily sold their own product from a first party sales company to a marketplace driven company, and that was what enabled them to weather the downturn, improve their margins, and come out of it a stronger company, right? So the tough times force you to innovate,
or reinvent,
or reinvent. Some of the companies that go through this cycle will reinvent themselves and come out better. In some cases, some companies will not make it. But the people in those companies have now been trained, as entrepreneurs, as executives, as developers, and they will go and reinvent the next generation, right? So this is the creative destruction that happens in the Valley through every cycle, and it's needed, right? I mean, it's like a wildfire going through like a forest, right? You think there's a lot of destruction, but at the end of it, that's what brings out the next generation of trees.
As you see the ecosystem in India today, what should be the driving force or the philosophy that entrepreneurs should focus on as they go about this process of reinventing or pivoting themselves out of trouble, so to speak?
Imagine that I'm starting this company today without the legacy of everything that I've had for the last 2 or 3 years. How would I think about this business, right? And that's the kind of thought process that I think is needed. And sometimes, for example, that I tell you, well, if I'm starting this company today, I'm going to be more capital efficient. I won't care about my top line. I'll care about being profitable and growing slower. And I'll care about making my customers as happy as possible so that they become repeat customers as opposed to trying to get more customers, right? So this might be the kinds of things that may not have been obvious earlier, but sort of become obvious as reality. The companies that are most likely to survive are the companies where with the strongest kind of founders, where the founders still retain most of the control of the company, and will innovate out of trouble. The companies that are least likely, in my opinion, to survive are where the founders retain the least equity in the company, and over time have sort of ceded a lot of the management to either investors or other people who they've been led to a point by their investors, and those are the companies that are least likely to succeed.
Do you believe that in India we're going to see this period of startup zombies, as you'd like to call them, where the VCs are unable to really pull the plug in that sense?
Yeah, no, actually the VCs have a very vested interest in not pulling the plug, in fact, right? If you look at the way the VC economics work, they carry the company at the last valuation that they funded it at, and they don't really want to mark down the company because that will reflect badly on them, and because this is not a public market, these stocks are not traded, nobody's sort of marking the stocks to market, and and that's why you get these zombies, right? Nobody wants to mark them down, and they always held at whatever valuation the VC last invested. And the VC now can use that to go and raise their next fund, which is what,
So given the kind of money the Indian startup ecosystem has seen, and a lot of it is venture backed at this point in time, do you believe that we're going to be seeing a sort of graveyard of startup zombies?
It's not really a graveyard, right? The zombies wander around the city, really, right? So I'd say we're going to see a lot of zombies in India for a while to come, they'll wander around and they'll kind of die in their own time, or some will get consolidated or bought. One of the things that happens with zombies is the best talent also leaves, because nobody wants to stay at a zombie. So these will be at some sort of zombies that are eviscerated from the inside as people leave and leak out, and the best talent leaves and then goes to start the next set of companies, and then slowly the zombies will realize they're dead and they'll fall down, but it'll take some time.
slow and painful process.
Yeah.
But since we're talking about consolidation, and I want to specifically ask you about what you foresee as far as consolidation within the Indian e-commerce space is concerned, given the fact that you've sort of been on the confluence of both traditional as well as online retail with Amazon and Walmart. How do you see that playing out in India?
If you look at what happened in the US, Amazon is the sole leader in e-commerce in the US today. India, we have several startups.
One of which you've invested in.
One of which I'm an investor in, and I hope they do well. Snapdeal. I think there is going to be some consolidation. I don't think the market exists for 3 or 4 e-commerce companies, all competing roughly in the same space without any differentiation, right? So either they will have to differentiate themselves and focus on different, in some way they have to focus on different customer segments or different price points or something, or there has to be some consolidation. Now I don't know exactly what form this consolidation is going to take. Is
Amazon going to go after some of the big Indian e-commerce companies? How do you see? Do you believe that is the most likely scenario?
I don't know, to be honest. I mean, Amazon could go after some of the big e-commerce companies. Do they have to? I don't know. They seem to be growing on their own. So I honestly don't know what how this is going to play out. Is it Amazon that's going to go after one of the big e-commerce companies, or are the Indian e-commerce companies going to merge to take on Amazon, or I'd say there could be a couple of players, 2 players perhaps left at the end of all this. I don't know what the composition. So in the kind of the general merchandise sort of e-commerce space, right? But I think there are going to be verticals where there are going to be the players in many different vertical spaces, just as they are here, right? Catering to different kind of consumer segment. But in the big general e-commerce, you can find pretty much any product and buy it kind of space. I think there's probably room for 2, right? So I don't know which those 2 are going to be.
What excites you in India specifically? What are the niches that excite you today?
The mobile and data plans taking off, smartphones and data plans taking off, and the fact that India is supply constrained, and therefore entrepreneurs who can cleverly connect supply and demand can build very, very interesting companies.
So are you going to be a large degree investing in your personal capacity? Is it going to be through rocket ship? Is it going to be through milliways? What can we expect, and what would be the average transaction size that you're looking at?
It's all of the above, and the average transaction size really depends on the company, to be honest, right? So there is no So in all these kinds of distributions, the average doesn't really make sense, right? Yeah. So it's more of each company is its own. If it's a startup, maybe they need just a small amount of capital to get started, right? Maybe they need $100,000 or $200,000 to get started. If they're in a growth phase and they're raising a large amount of funding, they need a lot more capital. We are not set up to be the Series A or the Series B investors. Right. We are more set up to be. It's always been our sort of my role anyway to be a seed investor. Right. I invest between $100,000 and $1 million in these companies and help them get to the next level.
So what's going to be the difference between the way that Milliways invests and the way that Rocket Ship is going to invest?
Milliways is more of a traditional Silicon Valley kind of VC model where we invest in companies that that are developing new and innovative and interesting technology from a computer science point of view. This could be in big data, in artificial intelligence, in computer networking. These are things that appeal to me as a geek, as a computer scientist, but that have the opportunity to change the world, right? So that's the kind of thing that we are looking for: better, faster, stronger kinds of things. Rocket ship, on the other hand, is more consumer focused, and there I think it's very differentiated as a fund from everything else that's going on in the valley, because a rocket ship, we are sort of using data and algorithms to make investment decisions. One of the very interesting things about a rocket ship is that because we are doing this data-driven approach, it makes us completely geographically agnostic.
Okay.
Right. So we don't. In fact, if you look at the companies that we reached out to just in the last quarter, only about 20% of those companies are in Silicon Valley.
Okay.
About, I'd say, 10% are in India. About 10 or 20% are in South America. About 20 or 30% are in Europe. So we sort of are reaching out and investing in companies all over the world.
So what have been the results so far of the investments that you've made through Rocket Ship already?
So that's an interesting question that you ask. Unfortunately, with the VC world, your results take time to show up, right? So we just started Rocket Ship about, I'd say, a year it's been, and we've so far made 12 investments. Many of those companies, so we do seed investments. Many of those companies have gone on to raise subsequent rounds of funding at higher valuation.
Right.
So to that extent, we can see some limited sort of feedback that what we are doing is a good thing, but we don't know. None of these companies have yet gone on to IPO or have major acquisitions, so we don't know, to be honest, exactly how this is going to play out. It's going to take probably 5 years to really know.
Do you see opportunities for milliways in India, or do you believe that that's largely going to be here in the valley?
Well, I do see a lot of interesting technical innovation happening in India. There's a lot of interesting talent that's emerging in India that can be the next generation of entrepreneurs, and they're thinking about ideas that the last generation of entrepreneurs or even the current generation have not, can't even think about. A lot of them are thinking about starting companies in India, but to serve a worldwide market. And some of these are software as a service businesses, which are very interesting. But some of them are also starting really through building new and interesting technologies out of India that are applicable all over the world. The kinds of companies that milliways could invest in would definitely exist in India. Whether we may not have the bandwidth to go and invest and mentor all those young entrepreneurs because we are based here, but I'm sure there will be VCs who can invest in those companies in India and take them to the next level.
Let me also talk to you about some of your other investments outside of India, and of course I don't know how many people know about this, at least back in India, but you're one of the early investors in Facebook, so a lot to do with timing and being at the right place at the right time in that sense.
Right.
As you look at what's happening in the valley today in companies like Facebook, what excites you about them?
The valley has been written off so many times and has come back. And
but did you imagine like Facebook would be where it is today?
Absolutely not. I had no idea that Facebook, that's I think what truly excites me about the valley. There's something exciting going on that I don't know about, and probably will find out later, right? So that's truly exciting. One of the truly exciting things about the valley, that there's so much talent here and there's so much bubbling that that you're constantly surprised and there's something new and innovative going on.